Hey, it's Pro John Ag. Get ready, because what just happened in silver isn't just a market move, it's a full-blown heist that was camouflaged as war volatility. Silver didn't just drop, it fell 10.4% in one day, cutting through 65.55 per ounce like a hot knife through butter. That was the lowest we've seen since December, and the damage didn't stop there. Gold is also losing value, down approximately 5%, but the miners are really feeling it. Discovery Silver and Endeavor Silver both lost 8.11% in one day. The price of Brent crude, on the other hand, shot up beyond $119 per barrel because of the Iran conflict flare-up and attacks on the South Par's gas production. The media wants you to believe that this is risk-off volatility or markets reacting to war and oil. Don't believe them. They are telling a story that makes it sound like it happened by chance, was natural, and couldn't be avoided. It's not any of that. The truth is awful, and it's right in front of everyone. People are panicking because of COMEX paper contracts, ETFs, and shady institutional funds that are driving liquidations. While regular investors are yelling, "Sell! Get rid of it! Sell!" Rich people and banks are buying silver for $65 an ounce like it's a fire sale. It's a trap, a carefully planned way for the rich to take money from the poor. There has been a huge increase in open interest on COMEX silver futures, which means there is a lot of short liquidation pressure. This is the kind of pressure that drains the wallets of regular investors while filling the wallets of those who know what's going on. Now, put the pieces together. ETF flows tell the whole tale. ETFs that focus on retail are losing hundreds of millions of dollars, while smart money ETFs discreetly build up behind the scenes. The monster is becoming stronger with every forced sale and every panicked click to sell. The elites are smiling in vaults as silver leaves the hands of retailers and discreetly turns into real physical metal. At the same time, the paper market is screaming like a fire alarm. This isn't simply manipulation. It's a war on regular investors, and silver is the battlefield. Here's where it gets worse. Loudness conveys the story of a lie. It seems like a frenzy on the surface. Increases in trade volume, frenetic orders, and flashing red alarms. But the real action is hidden under all that noise. Whales and big buyers are secretly buying up actual silver and allowing the rest of us to sweat it out. That rise in oil prices? That fear of conflict with Iran? They're bait, a distraction meant to make people feel FOMO and panic, so that retail sells when prices are low and the clever money quietly buys up everything being sold off in COMEX and ETFs. Retail traps versus clever money moves. This is a classic playbook, and you can see it happen right in front of you. When individual investors panic sell, automated liquidations happen, which makes the decline even bigger. At the same time, well-capitalized, secretive funds get ready for the next big move. Every dollar that silver drops today is like millions of dollars moving from scared hands to smart ones. The system isn't broken, it was made this way. Every twist, phony headline, and explanation regarding how oil or conflict prices change is a cover-up. The third shocker is that the media wants you to think that the market's big swings are just normal volatility. They're not. There is nothing regular about today's $65 drop. Every rise in open interest, every outflow from an ETF, and every minor liquidation that happens in a panic are all signs of planned manipulation, not a normal reaction to geopolitical risk. The headlines scream war, while the elites are discreetly locking up genuine silver, taking advantage of the panic like vultures circling a dead body. And here's the cliffhanger that will leave you speechless. Do you really think this price action is the complete story? You believe $65 is just a new level? Wait till we get inside the vaults. The COMEX and London inventories are running out, genuine silver is disappearing, and the truth about the difference between real availability and paper contracts will show you the huge deception that is happening right in front of your eyes. The hysteria at the stores is just the start. The real crime is already happening, and it's happening in the empty vaults and the shadow market. The pieces are in place, the dominoes are in a row, and the next section will show how much silver is missing, who is hoarding it, and why the $65 breakdown is just the beginning. When you see the data coming out of the vaults, you'll know for sure how big this operation is. The retail masses are stuck, The elites are getting richer, and the system itself is displaying its flaws in clear, merciless detail. Supplies are late, stocks are disappearing, and the COMEX and London vaults are showing registered silver prices that are close to all-time lows. The best part is that what you see on the screen as available silver is only a small part of what is really there. If this were Bitcoin or Ethereum, think about it. Exchange balances would be at their lowest levels in years, wallets would be frozen, and liquidity would disappear overnight. That's exactly what's going on in the market for real silver. The populace doesn't know that the system is sucking silver dry, while the elite silently hoards every ounce. Now, put the pieces together. 90% of silver trading is not real silver, but paper derivatives. Futures, options, and ETFs are all designed to make it look like there is more supply. In the meantime, actual silver is hard to find and is going from vaults to institutions. The leverage trap is cruel. They can lower the price without ever moving a single ounce of real metal. Every dollar decrease today is planned and made worse by forced sales, margin calls, and panic among regular people. This isn't volatility, it's a planned way to take money. Keep an eye on this. JP Morgan, BlackRock, and yes, the Fed are the quiet leaders of this orchestra. While the news is full of war panic and oil spike, these actors are putting pressure on sellers, making individual investors sell their stocks at a loss. Open interest spikes and ETF outflows are not random events. They are traps set to get weak hands to leave while the rich discreetly build up their positions. The scene is crazy, but the craziness is planned. The war in the Middle East, rising oil costs, and the Fed's hawkishness are all great ways to hide what's really going on. The news says that markets react naturally to macro events, but that's not true. This upheaval is planned manipulation meant to get silver at a lower price as retail loses faith. Every story about risk-off volatility is only a cover for what is going on behind the vault doors. There are echoes from the past that scream 2008, when gold paper contracts were rigged and physical gold quietly disappeared. 2020, when the COVID panic destroyed markets and elites bought everything retail sold. And FTX, where panic drove liquidation while insiders took billions. The process keeps happening. Panic is used, weak hands are crushed, and the wealthy keep getting richer. This cycle has been going on for as long as money has existed, but now it's happening in real time with silver and metals, and the scale is mind-boggling. This is the bit that most people miss. While the West is freaking out, the East is quietly stacking. Silver is leaking out of vaults in New York and London, but Asia, especially Shanghai, is buying it up at record high prices. The paper market in the West is very liquid, but genuine metal is discreetly going to wallets that will never be sold under retail pressure. Every time someone is compelled to sell COMEX futures, physical silver moves to the east. This is a huge shift of wealth that goes unnoticed. The leverage trap, the forced liquidations, and the vault hemorrhages all point to one scary truth. Retail panic isn't just bad luck, it's planned. The elite set the stage, war, plus oil, plus Fed fright, retail panic, price drops, rots accumulation. Then, when the markets settle down, the real metal is already gone, safely stored in Asian hands and shadow accounts. The West is left with paper promises while the real wealth is taken away. And here's the big question. Do you think $65 is the lowest it can go? Do you really think the worst is over? The big shock comes from the movements between East and West. The Shanghai silver premium is about to show who is truly purchasing, who is stockpiling, and which retail traders just fell into the trap. When those statistics come out, the COMEX and paper markets will no longer be able to hide the truth about how big this operation really is. The Shanghai silver premium has shot up to $25 per ounce over COMEX, which is a huge hint that Asia is quietly buying up actual silver while the West freaks out. Here's the kicker. While US ETFs are losing money because of huge outflows, unknown pockets and central banks in Asia are stockpiling silver at an unprecedented rate, entirely avoiding the manipulation of the paper market. It looks like every ounce that leaves the COMEX and London vaults ends up in Eastern hands, and the scale is shocking. The panic in US stores? That's only the smoke. The fire is going on silently in other countries. Now, put the pieces together. The hidden buyers are doing business without anyone knowing. These aren't hedge funds or retail traders. These are central banks and secret mega wallets building up real wealth. They don't worry about short-term price swings or stories about war panic. They're buying silver because they know what the West won't admit. The US dollar's dominance is under threat. If the physical asset is leaving the system and going to others who don't follow the same laws, paper contracts in New York or London don't mean anything. The Iran war and problems with energy in the Middle East are having a direct impact on global supply chains. Not only are possible sanctions, attacks on energy infrastructure, and rising tensions between countries pushing up oil prices, they are also making it harder to trade silver in the real world. When you add in a hawkish Fed, rising US interest rates, and a stronger dollar, you get the perfect storm that keeps metals down in the West while demand stays strong in the East. The market's tale is risk-off, but the real story is a supply shock caused by war and policy. The supply chain fight goes beyond politics. Mining in Mexico, Canada, and Peru is having problems since supply can't keep up with demand. There aren't enough vaults, especially for COMEX registered silver, which is making shadow premium markets, where real silver trades at a concealed premium that isn't recorded in regular data. It's a secret conflict that takes place in warehouses, vaults, and shadow accounts, and the average investor can't see it. Retail traders simply see flashing red numbers on their screens. They don't know about the true silver hemorrhage going on behind the scenes. The East-West dynamic isn't only about making money, it's also about power. A lot of physical silver is building up in Asia and central banks, which is directly going against the dollar's dominance. Every ounce of gold held in Shanghai or Hong Kong represents wealth that the West, which is mostly paper-based, has lost. The COMEX, the ETFs, and the futures contracts are becoming less and less related to reality. Markets that face West are panicking and changing quickly, but the main asset is safe where retail panic can't use it, change it, or sell it. This is a slow, quiet shift of power from markets that rely on paper to people who know what genuine scarcity and ownership are. Now, picture the scale. Individual investors are stuck in a paper-based mirage, while central banks and huge wallets quietly stack real silver, safe from margin calls, short squeezes, and panic selling. Every time US prices crash, people who are hoarding the real asset go crazy. The market may seem crazy, but it's actually structured chaos, with managed liquidity flushes, deliberate panic triggers, and stealth accumulation. War, oil, and the Federal Reserve's policies are all ways to change how people see things while wealth quietly moves east. And here's the cliffhanger that will blow your mind. This isn't just a story about an area or a metals trade. The change from west to east flows will have an unavoidable effect on the world economy, and the mainstream media will never report it. The fact that physical silver is leaving the US and Europe and building up in Asia is a direct threat to the dominance of paper and the dollar. The next steps aren't simply about silver at $65. They're about changes to the system that could change the balance of power in the world's finances. The next section will show how the macro system is broken, why debt and the Fed's printing trap make this unavoidable, and why keeping your money outside of banks is no longer a choice. It's a matter of survival. Higher interest rates are hurting everything that is leveraged, not just equities and Bitcoin, but even metals. The US debt recently went over $35 trillion, Japan's bond yields shot up to 0.8%, and the world's debt is now over $350 trillion. Every time rates go up, it makes leveraged situations less likely to work. Retail is going down, paper silver is going down, and margin calls are draining accounts. Meanwhile, the rich and powerful sit in the shadows, grinning as the system's weakness makes everything they do more noticeable. Here's the kicker. What the Fed's solution is: print. Again. Inflation won't go away, even when there are strict restrictions in place. Every time interest rates go up and make people panic, more dollars are made out of thin air, which weakens the currency and lowers the value of the savings of those who blindly trust banks. They call it monetary policy, but we call it a system that traps people and pushes wealth up. Every forced sale of silver or ETF during a panic is meant to strengthen their grip. Now, think about the whole thing. The system relies on paper contracts, ETFs, and derivatives, which all depend on leverage. There aren't many real assets. Physical silver is disappearing, and the retail folk is stuck in a mirage. The recent 10.4% drop in silver prices isn't just a price move. It's a macro-level stress test that shows how weak common investors are. The rich don't just get by when things get rough. They make money off of every macro tremor, every war headline, and every Fed whisper. This is the bit that most people miss. Technical and supply analysis show that silver might hit $55–$60 if fear continues. Gold is anticipated to stay in the $1,180–1,820 area, while Asian buyers secretly stockpile real metal behind the scenes. Every ounce that moves east is money leaving the West's paper markets. This steadily weakens the system while retail is distracted by numbers on a screen. The crisis isn't the conclusion. It's only the beginning of a bigger shift in wealth and the way things work. Now listen up. You have to do this. Leave the banks. Get your money out of their hands right now, before they take it away. Every time you wait or hesitate, leveraged entities have another chance to take value from holders who don't know what's going on. Your only defense is to have it in your hands, keep it yourself, and know what's really going on in the market behind the paper curtain. And here's the big news. In a world where governments inflate money, banks cheat, and wars rage, freedom is the only thing you really possess. It doesn't exist in ETFs, COMEX contracts, or bank records. It starts with keeping what they can't take away: actual, concrete, unmanipulated riches. Every ounce of silver you own and every safe place you have outside of the paper system is a vote for freedom. There is yet more to the story. The struggle goes on, debt rises, and paper markets will keep making people less sure about retail. But if you know how the system works, the vaults, the east-west flows, and how fragile it is, you can find a way to stay alive. The $65 drop in silver, the Fed's trap, and the East Horde all show who actually has power over money. When the mainstream talks about volatility, remember that it's planned chaos. Your freedom depends on recognizing it, comprehending it, and acting before it's too late.